Walter de Vet, Head of Commodities Research at Standard Bank. Good morning. Thanks for joining us.
Well.
You saw Caroline's piece there. Yes, copper's had its worst first quarter for a decade, but analysts we've surveyed say possibly 18% gains to come. Are you in line with that thinking or not?
Yeah, we are. I mean, we think initially, as Caroline has mentioned, the market is fairly weak right now with high prices, and the price has rallied fairly strong over the past 6 months up until the start of this year. So there has been some demand falling away, and of course, the monetary tightening in China, the Japan earthquake is denting demand short term. Ultimately, the market is in a deficit. We think the market will be a deficit this year and even a bigger deficit next year. So yeah, we think copper prices will have a good end to the year.
Oil, very much in focus in light of events in North Africa and the Middle East. And
Absolutely.
Brent, NYMEX crude, both resting around 2.5-year highs today. Are we at critical levels now?
Yeah, technically we are. If you look at Brent crude, around about $120 a barrel is technically a critical level. More fundamentally, of course, the Middle East, North Africa is a big supplier of crude, of course, and ultimately, if this unrest spread, yeah, crude can go much, much higher. For the world economy, of course, it is also a critical point. We certainly think if we go above $130 a barrel on a sustainable basis for a couple of months, it is going to start affecting growth globally negatively.
Are you forecasting then we will go above 130 for a sustainable amount of time?
No, at this stage, not a base case. No, we think
what needs to happen for that
we need
to take place?
We need to get a substantial amount of supply out of the market for a while, and of course, everybody has their eyes on Saudi Arabia. And that is, of course, the big producer. We don't think things are that critical yet that we will see supply cuts in Saudi Arabia.
What about gold and silver? I mean, silver highest since 1980. Gold pretty much close to its all-time highs. Is now a time to be continually invested in gold or not?
I mean, the next 12 months we still like gold. We still think gold will trade above $1,500 an ounce. Despite the rally that gold, silver has had, we still see good demand. We still see good physical demand, especially out of Asia. On top of that, of course, monetary policy, yes, there is some talk that it will tighten, but in relative terms, it's still very weak or loose monetary policy. Real interest rates remain negative in the US. It remains negative in China. That is good for gold, and it's good for silver. On top of that, we see good industrial demand for silver too.
Yeah, and you mentioned interest rate tightening, and the ECB could set the ball rolling this week. Should that sort of change our strategy at all when it comes to commodities?
Certainly not from our side, no.
Yeah.
We think it should not change the overall picture on a 12 to 18-month view. Yes, it might have some short-term FX moves, which ultimately does affect commodities short-term, but we don't think strategically it should affect the view.
Two other commodities that have been affected by events in Japan, platinum and palladium.
Yeah.
What's the outlook for these two right now?
Absolutely. I mean, platinum and palladium are really exposed to Japan, and they are a big consumer of both in the auto sector specifically. The problem with platinum and palladium is, it's geographically, it's produced mainly in Southern Africa, and we are seeing real cost pressures there. And we estimate with platinum below 1,700, with palladium at 700, it starts cutting into the cost curve, which is really, I mean, we don't see a lot of those commodities these days. So we don't see too much downside for platinum, palladium at levels I've just mentioned.
Yeah.
So short term, yes, once again, I think the Japan issues are denting demand, but ultimately we see these two metals also moving higher.
So what's the top metal then? Right now, where should we be putting our money?
Once again, it depends what your horizon is, right?
Yeah.
Short term, we still like gold, silver, as I've mentioned. If you take a 12 to 18-month view, we still like copper. We still think it's a good fundamental story.
Walter, thanks very much for joining us today. Walter de Vet there from Standard Bank.